The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We're going to take a look here at the DAX like we always do. By the way, I'm giving everybody a holiday next Monday. And we will see how this is going to work out. One of the interesting things about when Sarah and I travel to so many different places, we always see a Martin Luther King Boulevard. And of course, you know, she's not, she's actually a Canadian citizen. And so I had to explain to her why each of these cities has a major boulevard. I talked to her a little bit about the civil rights and what happened during the 60s and stuff. So anyway, it's interesting, how I guess the evolution of our society has come, because this is really something. When I was a kid, it was it's not like it was now. It was really something. As early as about 20 years ago, I was down in Natchez, Mississippi, a little town right outside of Natchez. I can't remember of it. And they still had, separate restrooms. And it was still, incredibly segregated. I just couldn't believe it. That was 20 years ago, and I don't think probably much has changed since that time. But if you ever get to Natchez, boy, that is one beautiful city. I really think that's a pretty place, but very unusual. Okay, let's switch over and take a look at the DAX on a shorter-term basis. As you can see here, we've had a lower high than we had yesterday. We went up to the 78% level. And since that time, we've been in this trading range. We've got this huge gap down here at 11,075, 475. That should be filled, but whether it will be or not remains to be seen. But it still looks, very, very interesting at this point. Now, I wanted to go over the gold just a little bit because I think we're at a pretty significant spot here in the gold market for a couple of different reasons. First of all, if we look at what's happened to gold over the past several weeks here, you'll notice that, let me get this chart up first so we can see it. You'll notice that all the corrections in the gold have been around $17. And so we hit 1187 last night. We took out the highs of January 5th by about a half a dollar. So around 1170 is where you'd be watching the gold. Now, there's some other numbers there that will be interesting for us in the gold. So let's take a quick look here at the gold on a little bit a longer time frame using an hourly chart. You're going to see the same corrections, only I haven't marked them off in $17 intervals because, the harmonic number in gold is 34 and 17. And if you take 34 times 2, that's 68. That was pretty much what our rally was off the bottom. So we'll almost to the exact dollar. As a matter of fact, it missed it by a buck. So you'll want to watch the area. You'll see here around 1170 and also 1165. So there's a $5 window there. I like 1165. And the reason why I like that one is you'll be coming down to a 50% retracement of this whole move that we had since the beginning of the year. It's also the area where the old highs were, where we broke down from when we went down to the 1124 level. So that's an area to watch really, really closely. Now, we've been up quite a few days now. We're up about 10 days in gold, very suspiciously, but we made new highs for the month. We did not do that in the silver. Silver has been lagging very, very badly all along, which is not a good sign. We've seen this happen in the past, and that usually means that the markets are going to correct more than you think they're going to correct. But if we take a look here, these charts should be coming up. I'm posting them in there. I hope everybody sees them. The last one that I put in here is the chart of the 60-minute silver. Maybe I'm going just a little bit too fast. Maybe I'll slow down just a bit here. Anyway, these markets have had higher bottoms. That's it. Okay, you've got higher bottoms coming in, you've got higher tops coming in, so there is a bullish bias here. We really need gold to get above the $1,200 an ounce level, and if it did it really quickly, you'll see a market, I think, that has really made a major bottom. Platinum has been acting incredibly well. It was up quite a bit yesterday. It shattered the 61% retracement and went up to the 78% retracement. So that's another one that looks, very good. Usually around the first of the year, you see some big changes in things, especially in the foreign exchange markets. I don't know if that's related to what's going. No, Mr. Z, I have not. I would love to see it. I've been looking for it, but I haven't seen it. I know Larry Edelson, but I don't have it. But I will try to find it. Fact is, I will do that right after the show today. His one last year was flat out spot on, as you remember, and I would really like to see it again. It's based on neural networks that I work on, but his, of course, is longer term. But we'll watch it, closely for sure. But I will try to search that for you. In fact, our good friend Marshall here in the room has access to some of that. So if Marshall, you'll put your little guide dogs out on that, I'd certainly appreciate it to see if we can look at that, because last year it was really pretty good. It missed the top by about a week or so, but it certainly did a great job of catching that big part of the move that we were fortunately involved in, which turned out to be pretty good. So this is going to be a fun year, I think, folks, 2017. I don't know how long the election stuff, I guess this battle that we have going on in the networks over time and what's going on with the stuff is going to continue forever. So we might as well, get used to it, whether it's going to be business as usual or not. This would be a big week for us politically, because if these nominees for the cabinet are, stopped or even slowed down a little bit, that's going to be a negative to our government moving forward. I frankly think it's great that we have non-politicians in these jobs. I'm all for having people in the armed services in there because A, they're extremely disciplined, B, they're very smart, and C, they love the country. Now those are B, and D, they don't do it for the money. So those are A, B, C, and D, for my reasons, would be enough to say, yeah, let's do it, as opposed to bringing someone from Harvard or Yale or Goldman Sachs or something like that. I'd rather see someone in there that is not doing it for the money, and some of them that don't even, won't even take a salary, which is really good. And then we'll see what happens. Anyway, we'll see how we're going to be okay no matter what happens. I really believe that. I think we're at a transition period in the country where we're going to be moving away from all this debt, and the interest rates are going to go back to normal, and we'll probably get rid of quantitative easing sometime this year or next, and then we'll see how it all works out, and we'll see what's going on. Okay, now the next thing I wanted to do was talk about one of the trades that we were looking at yesterday, and that was in the British pound. If you'll recall, we were looking for the British pound to come into got to take a break. We'll be right back, and we'll talk about this British pound because we need to watch it closely.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, we're going to take a look at this British pound. As you can see, we were looking for support to come in around the 122.50. This is a 4-hour chart, and as you can see, that support held for well over 3 hours, and then it went back through the levels. So you had a 30-pip profit on it at one time. So if you had put your stop at break even after you saw what was happening, you certainly would have been able to profit on that. But also, once it broke through that, it told you there was no more support there, and that pushed it down. As you can see, we went down to a little bit below the 1.27 level in the British pound. That's one of the advantages when you're trading foreign exchange, is you can, use your stop protection very, very aggressively, and that's what you'd like to see. Now, if you remember yesterday, we were also talking about a potential trade, and that was in the, hold on one second here, that was in the Australian dollar, and I wanted to put it up here to give you an idea of what's happening here. Here's what we were looking for in the Australian dollar yesterday, was to get it up around this 73.85 level. That's what we would be watching in the Australian dollar. And as you can see here, we did get up into that area, and we went exactly, if you'll see what happened is we hit the exact number, as you'll notice right up in here. We went up, touched that number, and then, of course, after that time frame, the market has sold off, and we've already broken down to the 73.10 level, which is that's more than a $700 gain in the Australian dollar. Had you looked at that pattern, this is actually no different than the British pound pattern turned upside down. It really is. There's really no difference between the two. So that's an interesting one to take a look at. So someone's asked a question about the Okay, all right. Let's take a look at the crude oil. Crude oil is acting very poorly, folks. We have to get support to come in here at around $51 a barrel. There's a big ABCD setting out there that'll be very, very important to watch. It's also one of the old highs that we had a couple of months ago, but it's looking more and more of what's going on. That's basically what you're looking at. Okay. Someone at the gain of it's just $100,000 contract is all it is. It moved it's $70. They're not private messaging. They're not private messaging me jokes. That's it. Someone asked me a question private message about something, and I thought it was rather funny. So we'll see if that's going to be funny or not. Okay, let's move on to the crude oil. The interesting part about the crude oil is when we got up there, we could not break out. That's a very important thing. Let's just take a quick look where we are right now because we have this ABCD forming. Now, this chart has not been updated yet this morning because you will see here that we have a ABCD structure that will finish up around the $51 a barrel level. That's going to be very interesting. So if we get down, and we're almost ready to break through this level to the downside now, which will give us that target of around $51 a barrel. That's the ABCD over the last 8 trading days. So watch this one very, very carefully because it'll be, I think from the daily chart, I think we've had a false breakout up here at 55. And looks like we're going lower. If you look at some of these stocks in the oil market, like ExxonMobil and Chevron, they don't look as bullish as they should if oil is going to go up. And whether that's going to be tied together or not, we'll have to wait and see. But it looks very interesting at that spot of whether we're going to see anything like this actually occur. So keep an eye on that one, along with everything else. Someone's also asked me if I would post the 2 charts that were sent to us by Kevin Murphy and Ed Carlson. I'll do Kevin Murphy's first, and you'll be able to see it here. Just one second. Basically, what he's doing, he's looking at Fibonacci time counts going back through 1974, and he says that January 9th was going to be an interesting date to watch. If we take a look at Ed Carlson, his is going to be on a little bit shorter time frame, even though it is still going back to 1998. You're going to see a lot of harmony and stuff in this because these days are lined up almost perfectly. And but you know the problem that you have here, folks, is if you do enough dates, you're going to find something that looks interesting. And that's basically what some of these things are telling us. But what they're telling us it in mathematical terms. And whenever you see numbers that come up that are related to 1.27, 1.618, 786, 618, this is Mother Nature talking to you, and you should sort of pay attention to that. That's the key thing to look at. Remember that markets do have memories, and they tend to repeat themselves over and over again. We showed yesterday about the bottom from 2009, 1932, 1982. All these have many, many similarities with 3 drive to a top pattern, 3 drive to a bottom patterns, and especially one that we have going, now in the Dow Jones, because if we look what happened in 2000 and you go back and look, you'll notice that the Dow, made its top in January and dropped, well over 25% in a matter of a couple of months, then rallied up to the 78% retracement, and then proceeded to give 66% of the whole move back. So these patterns do repeat. The problem is they don't repeat all the time, and you wouldn't expect them to, but the probability of them expecting to be repeated are pretty good. So that's the main thing to do when you're watching some of these things. Okay, let's take a quick summary here. I need to check the markets here right before the opening and see what we're doing here. There should be really strong resistance in the S&P at 2270. That's a 61% retracement back. And if we break to the downside, the first profit objective would be 2048. If this is going to be now, we made a new high yesterday in the Dow Jones Composite by a little bit. And basically, that's what we're watching. By the way, on that Australian dollar, that was a 2-unit trade. It made $350 per unit. It dropped over, well, it was a little more than that, but from 85 to 30 is 55. That's $550. And we were looking at a 2-unit trade on that. We trade usually double units in Australian dollar, Aussie, euro, and pound. The yen, we only trade 1 unit because it's a little bit wilder. And remember, these are intraday charts, folks. So a lot of you don't have access to intraday Forex. You don't stay up all night like I do sometimes. Not often, but sometimes. And but these are the ones that you look for, the real easy ones. That happened to be happening right before the football game, and I cannot believe I watched the first 3 quarters of the football game as I was doing my work, and then at the 4th quarter I just gave up, and I couldn't actually believe what happened when I saw the score this morning, that Clemson had come back and won the game. So that's a very, very very interesting one. Anyway, I have my second student that I ever trained 32 years ago lives in Birmingham, and he's a big supporter of Bama, and I know he was very, very disappointed to see what happened with that. We'll take a little break here, and I want to talk a little bit more about the crude oil, okay?
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're going to take a look here at the crude oil market. I've drawn in the Gartley. I didn't make it colorful like I usually do because I wanted to keep it as simple as possible. If you'll take a look at this, you'll notice that we have really strong support coming in here, just around that 51.30, down about 80 pips from where we're trading right now. That's an ABCD structure in a bull market, so that should give us a good bounce, even if it's bearish. Going through that, though, if we get below the $51 barrel level, that's going to take all the impetus out of the bulls, I believe, and we could start moving a lot lower, because we could easily make a 382 retracement of this whole move, which would take us down to around 47.50 a barrel, 48 to 47.50 a barrel. So we'll keep an eye on that, and we'll see how it's moving. So we'll watch it very, very closely here. We probably start out strong like we usually do in the markets, and we'll see whether they're going to keep going up or not, but we'll do one thing at a time. Now, I've been asked to take a look at a couple of charts here from a stock point of view. This is one from San Diego. One of our good folks over there asked us to take a look at Qualcomm. And as you can see here, we are looking at Qualcomm on a weekly chart. The reason why this is important, folks, if you'll look at the high that we made back in 2014, you'll notice the head and shoulders pattern. If you'll see the red boxes, those are the shoulders. And if you'll notice that each shoulder is equal to the other, that's coming in at around $70 per share in Qualcomm, and we hit it again. That's what forms the head and shoulders pattern. So the bearishness in Qualcomm is certainly prevalent, because we have lower tops, lower bottoms, and a head and shoulders pattern. So if we get a good spot to enter Qualcomm on the short side, it's probably the thing to do. Remember, they're a big mover of what do you call it? Telephones. They make these inside things of telephones, so that makes it very, very interesting. Okay, we want to look at another one here, very similar to this, only this happens to be Caterpillar on a long-term weekly chart, and we'll put this up to let you take a look at it. And I would like to know if the charts are staying good now and they're not jumping around in different sizes. Are they holding up okay? Because what I've been doing is I've been preloading. As I talk about the one chart, I put the second chart right behind it, and now I see what the problem's been is I try to move it up a little bit too fast. But this is the chart of Caterpillar. Here you can see a 135 pattern that is hold on here 1 second here. 135 pattern on the market here. Hold on 1 second here. I'll answer the question. I can't do two things at once. Do that, but give me a second here. I'll do this let me do the Caterpillar, then I'll answer the question. The Caterpillar, you see, had a 135. You had perfect symmetry between 1, 3, and 5. This is a weekly chart. And also, you also had a 78% retracement. So Caterpillar is also watching one that is really interesting to watch also. So keep that one in mind also. Now, the question someone asked, is there a Gartley on the 30 minutes at 2270 in the S&P? Yes, there could be, but it's a very, very, if you look at a 15-minute, you'll see it a little bit better. So, we'll see what's happening, what's going on. Anyway, let's take, no, I'm taller than he was. Napoleon was only 5 feet tall. I'm 10 inches tall. Well, I used to be 10 inches taller. I lost an inch over the last 70-some years, but we'll see. Anyway, we'll watch this overall to see how it's going to work. But these are longer-term patterns that are interesting because of where we are within the market as looking with some of those things. Also, I've been asked to talk just a little bit about this pattern that we talked about yesterday in Microsoft. And as you can see here, this is another pattern that is very, very interesting. We have a 3-drive pattern there. You can see the expansions that went up to the 1.618, and should be a lot of resistance in the stock of Microsoft at 64 to 450 per share. That's the way it looks like from this, and we'll see what's going on here. Okay, we'll see what's going on. Okay, someone explain to me why watching Dow 19,900 means anything. I don't see too much there, but we'll see what's going on. Okay, let's go on to the next one, and that is the price of Apple. This is one that really hit the news yesterday. Looks like a big breakout. Frankly, I think it's a false breakout, but we'll see. We'll put this up here to let you take a look at it here. This was basically from some of the people on CNBC. They were really pushing the stock yesterday. It hit 119.20 and change. It's now gone below that. I think it's going to have a lot of problems if it ever gets to 123, and it certainly could. But at 123, I'd be interested there because that would be a 3 drive to a top pattern, and it would also be a good place to have a very low risk short. It had a low risk short at that 116 level. The problem was it didn't go down very much. The most it went down to was 115, and then of course it reacted and went quite a bit higher. They're talking about some of the rain that they're getting in Central California and Northern California. Believe me, it is really needed, but boy, they are getting hit really heavily. 8-9 inches over a period of a couple days. It's really something. They might even fill up Lake Cachuma. They won't fill it up the first part of the year, but maybe with a couple years of water like this, they'll fill that beautiful lake by Santa Barbara up, and it will be pretty good. By the way, I don't know if you folks know this, but the reason that Meryl Streep moved away from Santa Barbara was because the lake was drying up, and she was afraid there wasn't going to be any water. So we'll see what's going on. Okay, let's just see what's happening here. Let's move on to the next one that we've had questions about, and that is the euro. Let's do the U.S. dollar index first, folks, because we're at this real critical level here. We're having a little bit of a bounce back today, very, very small, which is normal. But if we take a look at the euro, you'll see here that we've had a little bit of a bounce. And we should have strong resistance in the U.S. dollar index around the 103 level. We're at 102 and change right now. That equates to what's happening in the euro. As you recall, we had this pretty good bottom in the euro the other day, and we're still trying to get to that level to see if we can rally one more time. Because if we could get the euro to rally up to that 107 level, you'll notice that we're going to be completing a beautiful ABCD pattern with near perfect symmetry. It's going to equal the same move that we had between the 21st of March and the 7th of December. That would be equal in time. It would be equal in price. We're trading at the 105.40 or so right now. And if we can get this up to the 107, that would really be an ideal place to take a look at the short side of the euro. That would have a lot of things going for it from the things that you're watching. That's the main thing that I think would be really important to keep an eye on. There's not really much going on in the stock market at this particular time, but it'll be interesting as we finish out the rest of the day through here. But you're right. If we do have a Gartley forming here on this E-mini S&P, the target is 2270. 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, folks, we're back, and I've been asked to take a quick look again at the Dow Jones Industrial Average as it relates to the Bradley stock market model. So I'm going to post that into the room, and we'll talk about here just a second if I can get it to move. There we go. This is what we're looking at. As you can see, the ABCD move is 1.27 of the AB move. That's not to be unexpected, considering that we had the gap down there on election night. Or that was the day after the election, because election night we came all the way down 800 points. We were down around the 17,300 level during the election night, and then you can see that we've had this, big expansion. Hadn't it done that, it would still have been an expansion, but it would have been a 1.618 expansion. But what we're looking at now, if you'll watch the red line, that is the Bradley model inverted. And the reason why I'm looking at it that way is because it appears that this is the best fit that we can get. In other words, I look at one on the blue side that's been working really good since the election bottom, and then that top should have came in around December 13th, which some stocks have already topped at that point. But now it is pointing to the downside. And the reason why I do that is because I'm looking at the other patterns in the NASDAQ. I'm looking at the pattern in the IWM, which has been very weak. It topped well over 10 days ago. And then also the S&P 500. And when you add these all together, I look at the patterns, and we have so many of them at that 1.618 level that it makes it, very, very interesting, much like we were doing back in 2000. I can remember the top in 2000 so vividly because I was in San Francisco for the Money Show conference. I was giving a speech to about 300 people, and this was the dot-com bubble, and people were actually walking through the halls carrying their position, their position sheets of what they had and their P&S statements of how much money they were making, and talking about it. It was truly amazing, and we were over a time, like I showed you at that Dow chart of the long-term weekly, where we were setting at what a major 1, 2, 3, 4, 5 expanding triangle, 3 drive to a top pattern. Everything was in place. Not only that, but the headlines on Business Week and Business U.S. News and World Report and Time Magazine all had a picture of a giant bull with NASDAQ 5,000 listed on the thing, and the market topped on March the 24th. That day, that was a Saturday, and I was so adamant about this, and people were chattering all the time. And when you're speaking and people are talking in the room, it's very, very disturbing because you can't remember what you're saying. And so I got up on the desk. I actually shocked a couple of people, and I pounded my feet, and I said, people, listen to me. I said, there's a train coming through the tunnel at 200 miles an hour, and you're not ready for it. And what I did, I told him, I said, all you have to do is to put your stop below the previous day's low and previous week's low, and you'll be fine. And okay, the folks are giving me ideas on how to take my medication. Anyway, what happened was one lady called me about 2 weeks later when the market had started to collapse, and she said, thank you for this. I really appreciate it. And I says, well, I was glad you got out. And she said, oh, no. She said, I didn't get out. She said, I'm just waiting to buy more on a little pullback. She said, I'll probably start buying some more tomorrow. And that was with 300 people in the room. So that's how much influence I have when I take a look at it. We'll see what's going on with some of these things as we go through these markets. But anyway, that's what we're looking at right now. My beeper's starting to go off, so hold on. They're trying to tell me something with something. That's gold. Gold's getting up to 1190. This is what we wanted to see. We'd like to see this gold pop above 1200. That would be the ideal situation. But silver's starting to move in the right direction, so we want to keep a close eye out on that one for sure. All right, the next question about the bonds. The bonds are, we've been in this level here. We're about the same level in the gold and in the bonds as far as a rally. The rally in the bonds sure could continue a lot more. So you're going to have to bear with me 1 second here while I turn this off. Otherwise, I'm going to be beeping forever here. Just give me 1 second. It is an old alert that I've had in February gold a long time, and it is going off. So I want to see why. Give me a second here. Good. That's what I wanted to see. Okay, we are taking those highs out. That's good. We took out the highs of early December. Not quite yet. That needs to get, it says it took it out. Not yet. Let me see. Oh, I had it right under there. So we're almost ready to take out the December highs at 1190. So that'll be a key number to watch. We really need to get moving. If we get above this 1190 level, you should see 1193 or even higher if it's really a good breakout. But watch that. That's a spot that could be, very, very interesting as we walk through some of these things that we're looking at. Getting back to that Bradley model, folks, it's a good model for looking at trends over a period of time. But remember, the accuracy rate on it is about 70%, which if you stop and think, these can be done years and years in advance. And they still give you the key dates. So it's truly an amazing thing. So it's not perfect, but boy, it's by far better than anything I've seen. In some years, it's really, really spot on, and especially for periods of time, you get these, tremendous moves. So it does have good validity. Statistically, it's certainly fine, but you want to be able to use it with caution, because you have to put it with some patterns in order to make it really look like it's going to be something that is, very, very interesting. Another one that I wanted to show you, of course, if you give me a second here, is this Dow weekly chart that we're looking at here, and we'll put this one up to take a look at it. We're seeing basically the same pattern that we had in 2000. It's this ABCD pattern, and we also have the 1.618 level that measures up to almost 20,000. We got to 19,999.67. So we missed it by 38 cents. I don't think it means very much, but who knows whether it's true or not. The other one that I think is important is the fact that we had this long-term pattern in the NASDAQ weekly. Also, this is the smaller, the NASDAQ 100. These are the ones that are the really big ones, the top 25 stocks that we look at. If you'll notice, this one also is making that 1, 3, 5, 3 drive to a top pattern with the 1, 2, 3, 4, 5 expanding triangle. There's just a lot of them across a whole different formats here, and whether they mean anything at these particular times or not, we'll wait and see, because as the Chinese curse says, may you live in interesting times, and that is actually the case to look at. So we'll be watching it very, very closely, and we'll see what's going to be happening with some of these things. As far as per support in the E-mini S&P, I mentioned 2250 to 2248. If this leg down gets to that level, anything above 2274 would suggest we're probably going to go a great deal higher. That's the way it looks like today. So, by the way, the low on the Dow was July the 8th, 1932. Basil Chapman shared that with me, and I went and checked, and for some reason I had July the 5th written down from my Gartley book, and as soon as I'm done here today, I've got to check that, and we'll go from here. I got a special thing to show you at the break, and we'll be right back.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I posted a picture of a trading system, a trading platform from one of our friends. It is the largest screens I've ever seen. I think it's about 9 feet across, and this is really a spectacular way to look at the markets. But it is big. It's I don't know how big they are, but they're really big. And those are regular cabinets that you're looking at. Those are not miniature cabinets, folks. Those are regular cabinets. Anyway, the dollar is going to be really interesting to watch here because we stopped at a perfect 61% retracement here overnight in the euro down at that 105.55 level. We've had a good move of 55 pips right off the bottom. That tells us that we're most probably, not only that, but the Australian dollar is coming back ready to attack the old highs too, which tells us that the U.S. dollar is most likely getting ready to go down a little bit, and that is certainly bullish to the gold. We did get to the 1190.50 level that we were hoping to get to, so we did take out the December highs. That's going to be very, very important to look at. So keep in mind that at 1190, you're exactly 2 harmonics. 34 times 2 is 68. You add that to the bottom, and that takes you to 1191. So that's going to be real interesting to watch that in the gold market. Silver still lagging badly, but still doing much better. We got up to that 1686 level. That makes it looks a little better from these standpoints. Keep in mind that we have a holiday coming up on Monday, so it's going to be a short week next week, and then we will have a full week after that. I've been asked to talk about the support point in the S&P is at 2250, 2248. Resistance on the upside is around 2270. So those are the numbers that we're keeping an eye on today in the E-mini S&P. And of course, any close above this 1193, 1195 level in gold would tell us that this bottom that we had on at the 1125 level is certainly spot on, and you want to look to be a buyer. Remember, all the corrections we've had past month have been $17. 877-927-6648.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.